For more on the breaking headlines that crossed earlier this hour on the Nokia Siemens deal with Motorola, we bring you the kind of insight that you won't get anywhere else. Bloomberg senior analyst Iyan Adewuya joins me now on the deal desk this morning. And Iyan, it is Mergers and Acquisitions Monday, and Nokia Siemens Networks is buying Motorola infrastructure for $1.2 billion. It's a long-awaited announcement. We had heard it might be coming today. It's now official. Is this something that we could see more of in the future?
Absolutely. As you look at major strategic players in various markets, they're trying to reposition their assets to cope with the new normal, and they're trying to cope with the economic conditions that are happening in various major markets. And I think you will continue to see this. M&A will be a key mechanism for a lot of major strategic players that are trying to reposition themselves to take advantage of the coming weeks and months.
Right, and we do know that Nokia and Motorola are both scrambling to pay catch up in their handset division. So
absolutely.
Okay, and there's also a couple of private equity deals or possible deals that we want to get to as well. And what's interesting here is that they kind of span the globe. You've got something going on in Australia, potentially something in the UK, and also here in the US. Let's start with the one that's official, Healthscope in Australia, being taken over by TPG and Carlyle.
Absolutely. This is a long time coming. I mean, bids have been going on and rumors and talk have been going on since around May, and finally here it is. The deal has come to market. And it kind of shows how the private equity market is still kind of volatile. I mean, this is a deal which is the third largest private equity deal of this year, but at the end of the day, you saw how it kind of took time to get the deal done. There were bidders that dropped out, other bidders that materialized, and finally here you have a deal. The interesting thing to me about this deal is, once again, the name in the mix is Carlyle. On Thursday, we were talking about them with the NBTY deal.
That's the biggest so far this year.
The largest so far this year, and here again they are. So they're being very aggressive on both sides of the ball.
Yeah, you definitely see that. Carlyle aside, there's also a potential bid for Tompkins. It's still something that's being mulled over right now. Talk about that one.
If that deal comes to market, then we will have a new largest deal for the year. If that comes in at about $4.4 billion as it is being valued right now. And so what's very interesting to me is that private equity firms are having to expand their scope across the globe to chase assets or companies that have very good valuations. And you have to go and do the deal wherever the deal can be done. In this case, it happens to be outside the U.S. market, and that's what they're doing.
Okay, speaking of the U.S. market, Goldman's Kinder Morgan is potentially looking to do something soon. And Kinder Morgan was a publicly traded company before it was taken private.
Absolutely. It is these types of deals that make private equity firms salivate and keep them in business. If you look at the fund, Carlyle Fund 4, I believe, that invested in Kinder Morgan, I mean, they've returned, according to their last investor letter, the value of their investment has gone up about 54% in that. So you see private equity firms looking to take advantage. They're kind of pushing the envelope here. The equity markets have not been all that stable.
I was just going to say the timing's kind of interesting.
Absolutely, but they're being very aggressive as they have to return money to investors because they have to raise new funds as well.
All right, we thank you for your time. I've been speaking with Bloomberg senior analyst Iyan Adewuya.